Daragh, the dollar index is up a little bit today. We're at 89.5. But how have we seen this rise in yields, both here in the US and relative to other countries, and the dollar weakening? How does that work?
It's a peculiar one, isn't it? Because I think markets have become very accustomed to this idea that look, when yields go up, then that respective currency should rise also. But this has been breaking down for a while. I know it's become a very fashionable thing at the beginning of this year, but really the correlations between those two elements of the market have been weakening really now for about 3 to 4 months. But I think what changed at the beginning of this year was that the US administration shifted the focus towards US trade deficit. It's not something we've looked at, I think, for a decade or more. And it meant that the dollar became, if you like, a structural story. This is a trade deficit that needs rectifying. There's a fiscal deficit we need to worry about. The cyclical aspect, which is what's captured in those bond deals you mentioned, kind of got relegated to the background. And so it could kind of behave independently. The dollar could behave independently of those yields. These fashions ebb and flow, but for now, I still think that link between yields and the dollar will remain relatively weak.
So has it caused you to change your outlook at all on where the dollar goes, say, versus the yen, which today is at 110.15? 110 handle now, guys.
Yeah, I mean, we're not immune to those processes. We did revise, for example, euro dollar higher to 125 at the end of this year, which is pretty much where we're at from 120 previously. Our overall story for the dollar, though, is that we don't actually think 2018 is going to be a terribly exciting year for the dollar. You know, most of what the Fed's going to do is in the price. There's no great dramas we suspect to come for the dollar. But on dollar yen, we've got a year-end forecast of 105 moving to 102 next year. So there is a pretty persistent strengthening of the yen that we believe will extend. 102
dollar yen next year?
Yes.
That's a pretty big move from here.
Yeah, it feels that way. I think your last speaker was talking about context. I think it's because we've been used to dollar yen not doing very much. And we've gone all the way from 80 to 125, 126. So actually, that kind of move isn't so enormous. But I think it's interesting because it's happening against a backdrop, to our mind, not necessarily of weak equity markets over the next year. It's a function of withdrawal of the BOJ, a discussion about exit at the BOJ, amongst other factors.